Today, we're going to be talking about an ICT strategy that can be extremely powerful and profitable if implemented correctly. This one is called the turtle soup. All right, let's get into the video.
You take the red pill, you stay in Wonderland, and I show you how deep the rabbit hole goes.
All right, guys, so before we even get into the video, make sure that you smash the like button, leave a comment down below, and subscribe to the channel for more great videos just like this one. Let's go ahead and dive into it. So we have external buy-side liquidity, external sell-side liquidity. Let me go ahead and mark up the 9:30 hour. This is when the market opened up. So we're looking for a sweep of one of these sides, right? So for the turtle soup, we are looking for the ultimate draw on liquidity that is external, and then waiting for an internal sweep of liquidity, almost as a manipulation type leg, entering on the fair value gap and riding it up to the external liquidity, which is the draw. Okay. So in this case right here, if we scale out, we see that we had this liquidity over here. Anytime that you see wicks that are super standing out like this, pay attention to those, mark those up. It does not like to leave random price like that sitting out. Okay, so we'll go ahead and we'll just mark this up, drag it all the way across. Okay, and we could just put that as a liquidity leg, like that, so we know. Boom, liquidity, right? So during London, this is London session here. What happened here? Came down, swept London lows. Also came down here, sweeping this liquidity, okay, which is the external. So swept the external, made this leg. Remember what I said about these wicks that are randomly sticking out? It likes to take those. So we had some consolidation, manipulation, and then distribution. Okay, power of three. Remember that. Power of three: accumulation, manipulation, distribution. Okay. So we swept external sell side liquidity, had some consolidation. You go to the 1 minute because I traded this actually on the 1 minute. Boom, came down here, swept all this. Here's your accumulation. We came up. Here's your internal liquidity. That's what you want to be looking for, right? Because we already swept the external sell side liquidity. At the accumulation, swept internal liquidity as well as the external sell side liquidity. Strong push back up. Fair value gap. Enter on the fair value gap. Where are you targeting? External buy side liquidity. Ride that up. Price came down. Even tapped it 2, almost 3 more times. So it gives you a chance sometimes to get in. So you got to be watching this. So just make sure that you remember when you're going into the session, I always trade this type of model when it is New York AM session. Okay, it happens throughout the day. You can also catch it in the New York PM session, but I prefer to trade it right in the New York Open, right around the macro time, which is the 9:50. So right here, 2:10:10. A lot of times you're going to have a move. And what happened right at 9:50? Look at this. Like clockwork, 9:50 we started having a push back up. So you're going to look at price and say, okay, you should have this already marked out. Boom. Sell side liquidity was swept. Accumulation, right? Accumulation is literally just consolidation. It's collecting orders. Now it pushes back down again, giving traders the idea of, oh, it's definitely a bearish day. Let's go ahead and jump in sells. Boom, fake them out. Any guys that were in buys after it took out the sell side liquidity before, oh, it took out sell side liquidity. Let's go ahead and jump in. They're in buys. Boom, 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 consolidation, going up even more, and then bam, takes those guys out. Sweeping external sell side again, strong push back up. But we know if it's going to be a quality turtle soup setup, external sell side liquidity was swept, internal sell side liquidity was swept, along with the perfect setup, with the external sell side. Once more, right in that fair value gap, enter the fair value gap, and we ride it all the way up to external buy side, which would definitely going to give you. So anytime that you're doing this too, you can either put your stops below the swing low, or below where the fair value gap formation was started, which is right below here. Okay. Take your target. External buy side liquidity. Easy 1 to 4. Even went up a little bit higher if you wanted to be trailing and just watch. Could have got a 1 to 5. Now, don't think that you could just jump in and see this live all the time. It takes practice. It takes an eye for it. You're going to have to be back testing, looking for this exact kind of formation to happen in order for you to catch these. Just like the supply and demand strategy that I gave you guys before. If you're not looking for liquidity to be taken, then you should not be taking the trade. That is the key to a lot of the ways that I trade, is watching for liquidity to be swept first. Always liquidity swept first, and then look for the quality setup. Where is it forming? Is it giving me exactly what I'm looking for? Don't chase the market. Let the market come to you. You're watching the market, waiting for it to create what you're looking for. When you see that it's been created, that is when you jump in and take the trade. Now, if you lose, big deal. Okay, come back again tomorrow and try it again. That's the thing about trading, is we are looking for the quality setups that we're trained to do and then letting them play out. But when you're looking for quality setups like this, the chances of success are a lot higher than just jumping in and taking random trades. That's going to wrap it up for this video, guys. I'll go ahead and post the supply and demand strategy video in the top part of this video here. You can click that, check it out if you would like to try out that strategy. And until next time, I will see you guys in the next one. Peace.